Weakness extends on the street with the Nifty now falling to the 26,100 mark while broader indices outperform. Durables and IT stocks see healthy buying, but autos, realty and oil and gas lag. Titan, Senco and Kalyan Jewellers shine after strong Q3 updates. Titan's consumer business grows 40% year-on-year, led by jewellery growth of 41% on festive demand. Meanwhile, Senco Gold reported a robust 51% revenue growth. Kalyan's revenue jumped over 40%. Jubilant Food reported a steady Q3 with consolidated revenue rising 13% year-on-year, even as like-for-like growth slowed to 5%, the weakest in 5 quarters. Brokerages turned cautious, trimming target prices amid moderating demand trends. Cipla under pressure after its Greek arm receives Form 483 with 9 observations linked to manufacturing and quality practices for lanreotide. The plant had faced supply disruptions last year, which hit North America sales and led to a loss in market share. Hello and welcome. You're watching Closing Trades on ET Now. I am Snehi Shah and this is a show where we are going to be tracking the last leg of the market right now. Let's pull up the Nifty and see what's happening on that front. Nifty, in fact, now under pressure below 26,100 and almost at the day's low is where the Nifty is at. 0.3% cut coming over there. Taking a look at what else is happening in the market, want to see what Nifty Bank is doing because at one part of the day, Nifty Bank was slightly resilient but has given up all of that, about a 0.5% cut, and now struggling to hold on to that 60,000 mark is where the Nifty Bank is. India VIX is cooled off 0.5% further. Sensex also under pressure. But let's talk about what's doing well from the Nifty 50 group of stocks. It's Titan, the top Nifty gainer, a 4% uptick coming on that front on the back of very good Q3 updates. You have Jio Financial, HCL Tech, Infosys, Wipro, TCS, all of them seeing gains of more than 1%. So clearly the day of the IT stocks today. On the flip side, Cipla, like we were discussing on the back of that Form 483 observation, with that 9 observations coming in for its German unit, Cipla is lower by about 4.2%. Maruti Suzuki also seeing a big cut of about 3.7% in trade, followed by Max Health, Tata Motors PV and Tata Steel. The advanced decline ratio is slightly skewed towards the declines, not much. So on that note, I want to see what the Nifty Midcap and the small cap indexes are doing right now. The market breadth, like you can see on air, it's slightly in the favor of the declines, about 1584 towards the declines and 1300 towards the advances. So the broader end of the market seems to be holding on just fine. The Nifty Midcap space is up 0.3%. The Nifty Small Cap also will be up on your screen, and that too in the green, a 0.2% uptick coming in. Sectorally, let's understand what's happening today. IT stocks, like I said, are doing very well for themselves. So Nifty IT, top sectoral gainer. It's the midcap end that's outperforming the larger caps. Persistent Systems is up 4.25%. OFSS, Coforge, LTI, Mindtree all seeing gains of more than 2%. That followed by the Pharma Index. These are the only two major indices that are in the green. On the flip side, big cuts on auto, realty, PSU banks, followed by energy, media, FMCG, metals. Let's take it across to my colleague Ravinder to bring us a better sense of all the stocks that are buzzing in trade as we speak. Ravinder.
Well, as on the back of order win, CMS Info System is in focus, where company has won a major landmark order of rupees 1,000 crore for SBI integrated cash solution contract for approximately 5,000 ATMs, and this landmark 1,000 crore order with 10-year contract from the State Bank of India will deliver an incremental revenue of rupees 500 crore. So back of this in CMS Info System is in focus. On the back of block deal, HDFC Bank is under pressure, where 1.12 crore shares traded in a block deal. So back of this, HDFC Bank is under pressure, and Info Edge is in focus on the back of their business update, where in Q3 the company's standalone billing was up by approximately 12% year-on-year basis at rupees 742 crore, and in recruitment solution also saw a good uptick of more than 11% year-on-year basis. So back of this strong operation update, Info Edge is in focus, and the stock is up around 2%. And if we talk about some of the stock that is in action on the back of brokerage note, is first is the Camlin Fine Science, where InCred Equity has maintained their ad rating and hike target price rupees 480 as compared to earlier target price rupees 474. They say that the company to benefit from the structurally tight vanillin markets in the US and Europe, and with the prices likely to top USD 32 per kg by second half of FY27 in the US and USD 19 per kg in the European Union. So back of this bullish note from the incred equities, Camden Fine Service Science is in focus and the stock is up approximately 5%. Stud Accessories is also in focus on the back of bullish brokerage note where Antique has initiated coverage on Stud Accessories with buy rating and target price rupees 750. This is the product premiumization to drive the EBITDA growth for the company and regulatory tailwinds to accelerate the formalization. And lastly, Tata Technologies is also in focus on the back of bullish note where JP Morgan has come out with the note and they have upgraded the stock to neutral from the underweight rating and hiked target price rupees 710 as compared to earlier target price rupees 570. And lastly, Tata Elxsi 2 is in focus on the back of the upgrade from the JP Morgan where JP Morgan has upgraded the stock to neutral from the underweight rating and hiked target price rupees 4,800 as compared to earlier target price rupees 4,000. So back of this, both this Tata stock, Tata Elxsi and Tata Technologies is in focus.
Okay, Ravinder, thanks for taking us through that. So yes, lots of stocks to watch out for. We also have Kunal who's joined us in the studio to get us a better sense of what the market is doing right now. Kunal, continued weakness in the market and the 26,100 also seeming difficult to hold on to right now.
I'll not call this weakness, Sneha, I'll call this an opportunity. And,
okay.
Yeah, because I would believe that we are now tapping back into a strong support territory on the index on the downside. 26,000 levels thereabout is the short-term support for the index. The indicators are nearing very close to the oversold territory, both in terms of the Nifty RSI, price levels of 26,000, the put call ratio, which I think is now almost at 0.6 to 0.65 thereabouts. So I think all of these indicators, maybe I think tomorrow if you open a tad bit more softer for the indices, that will be a classic opportunity for contract traders to go for a buy for the index. My sense is that we are in a very strong uptrending mode, but it's just that within that strong uptrending mode, this is the wave of correction on the back of the last 2-3 days of major specific large cap selling, and that to the heavyweight names, HDFC Bank, ITC, Trent, Reliance Industries, etc. So I think the markets are just about trying to adjust to that kind of selling impact. But net the view is on the bullish side, and I think this dip, maybe another 50 points on the downside, 25,950 thereabouts on the spot levels, could be a classic opportunity to go for a contra buy.
Will that happen today, Kunal? Will that happen tomorrow?
See, I think we dipped towards 26,030, 40 on the spot.
Correct.
So maybe we'll wait for one more day. Ideally, the gap generally gets filled when the market opens for a fresh day, because the initial sentiment is that the market breaks a strong psychological level and there is a little bit of panic which creeps into the market. So tomorrow, if it happens in the first half, it's a classical contra opportunity.
Perfect. So it might happen in the first half tomorrow. Maybe we wait till tomorrow and in the first half, if at all, initiate a buy, and maybe in the second half we start to see an uptick.
Yes, possible.
Very interesting.
Sir, you call this market the one where you're seeing opportunities. So be a little specific. Where exactly are you seeing opportunities?
So index, as an index trade, it's an opportunity. Even as a sector front, Snehi, the market breadth, the last time we were at 26,000 mark, maybe 2 months back. 26,200 is what we hit in the month of October, November. You compare the 26,000 mark last time around to this time around, sectors have improved. The market breadth has improved. Metals are at a lifetime high. You've seen the FMCG stocks reviving. Pharma stocks are coming back towards, individual stocks are coming back to the 2024 highs. Capital market stocks, BSE, etc., they are going to a revival phase. PSU banks have done reasonably well. Private sector banking stocks, ICICI Bank has seen a good revival of 6-7% broadly. So the market is not as bad as what the numbers would look like, right? So that's why I'm saying that this is an opportunity, and this is not as bad a market. It's just that when you see the same level of 26,000 again and again, and when you see the index dropping by 250 points, many times traders, they get flustered and they say that the markets are repeating the same pattern. But this time around, it's an opportunity.
Okay, and any specific buy recommendations this afternoon? Yeah,
2 buy calls. The first is the one Voltas, and I strongly sense that now we are looking at the consumer durables end of the market will start to pick up. So I think Voltas at current levels of 1,500 thereabouts throws in a good opportunity. 1,555 is where I would place the near-term target for the stock price. 1,480 thereabouts as a stop loss. And Varun Beverages, something which I initiated in the morning also, looks fairly attractive. The stock is poised at a decent juncture above the 500 levels, completing a bullish flag formation on the daily charts. So would look out for targets closer to 525. Stop loss remains at 488.
I wonder how, Kunal, you view IEX. That's the other one, which has been in focus since yesterday, 3% higher in trade today as well. So that strength sustaining, that just wasn't a one-day move anymore. Does anything change on charts?
The volumes are better than yesterday, or almost at par so far. So I'm assuming that in the next half an hour, 1 hour, the volumes will slightly inch up higher than yesterday. Yesterday, the entire volume activity happened in the last, I think, 1 hour or 1.5 hour.
Yes.
And today, the entire day, the volumes have started to be a lot more stable for IEX. So that tells you that it's a more calibrated buying today than yesterday, where it was more of a frantic buying the last 1 hour, 1.5 hour on the back of the news flow or the expected event for IEX. So this is a very strong indicator that we are looking at a major bottom being formed for the stock. So I think that 130-35 level, which was tested for IEX end of the previous week or mid of previous week somewhere, that is now a strong support, and we can now look at the stock building up the gains. The only caveat over here one has to understand is it's a very high beta stock, and we've seen that it could be prone to a lot of news flow. So that additional bit of volatility could be a part and parcel which one has to fathom. But I think if you're looking at this as a positional trade, 130 as a support and a stop loss could be a good trade where one could look to initiate for the next 3 to 6 months.
You know, Kunal, when I'm looking at themes which are playing out in the market today, you look at the mid-cap IT names, Tata Elxsi, KPIT, Sonata Software, Birla Soft. If you just pull up all of these, all of them are up 4+% in trade. What's happening here?
Yeah, so this is telling you that the markets are now coming back into that reshape on the mid-cap IT stocks.
Yes.
There was a phase in between where Coforge, Persistent, they had fallen down by I think 8-10% on the back of individual news flows for these stocks. And that's why you saw all of a sudden the Nifty IT index struggling a little bit. Even though the large cap stocks, they had not seen a major correction. Now with the mid-cap IT stocks making a comeback, many of these stocks hitting fresh swing highs. Tata Elxsi, for example, at 8%, 9% up, is now for the first time coming back into a breakout above its 200-day moving average. And this is after a gap of, I think, around 6 months or maybe more than that. That is a very strong breakout indicator. And so is the case with many of the other mid-cap IT names which are trying to make a comeback of their previous swing highs. This tells you that the Nifty IT index is getting a lot more broad-based. We are not dependent on just 1 or 2 large cap individual stocks which could take the baton forward. But I think with the sector opening up, this is a strong signal that we are looking at this as a fresh trend on the upside.
Okay, so that's on the Nifty IT index, and also some of the mid-cap IT stocks that Harsh was just talking about. Stellar gains on some of them. And Rabinder was also highlighting that there is a brokerage upgrade on names like Tata Elxsi. But moving away from IT, let's talk about consumption. That has been the theme of the day, because you've got updates from Titan, you've had Jubilant, you've had Senco, Kalyan and Godrej Consumer. So these are the 5 updates that we've been talking about in depth today. Titan, let's just revisit what that stock is doing. Top Nifty gainer, very good move coming in. The jewelry business has done very well. Gold coins, plain gold, watches, eye care, emerging business. Emerging has been slightly concerning, to be honest, but international business continues its momentum. And what really stands out is the price hike coming in from Goldman Sachs, Jefferies and JP Morgan, wherein the stance has been maintained, but the price hike has been undertaken. We've spoken about Titan in depth. What I really want to take a look at right now is Senco. Let's pull up the chart and see if the stock has seen a little bit of a correction from the day's high, because last time I checked, the stock was up by more than 12%. So we'll just have the stock of Senco Gold on air, and yes, 13% continues to gain right now. A good move coming in on Senco in Q3. They've given an update that the revenue growth has been higher by 51% on a year-on-year basis, which is a significant jump from that 6.5% mark we saw in the previous quarter and 28% in Q1. So very solid numbers over here. The SSSG growth has been 39%. Once again, a stellar figure over here. And more importantly, the management has said that they are confident of achieving 25% plus year-on-year growth for FY26. So that guidance is intact, and they are very positive on achieving that itself. And in fact, they're saying that they're very geared up for the Q4 wedding season, and they aim to reach 200 showrooms by the first half of FY27, and that also looks very possible. Senco Gold doing very well for itself. Kalyan also very strong updates coming in. Kunal, we've spoken about these stocks in the morning as well, but this 13-14 jump on Senco, does that change your view on the stock?
Yeah, absolutely. I was actually surprised, because I expected Titan to be the best performer and maybe Senco and Kalyan Jewellers to be the either the second or the third. But this is a very strong price performing move for Senco. And I think this also brings in a case that we are now looking at these stocks coming back into a major revival phase. So on one hand, it will look like that these stocks up 5-10%, maybe the opportunity is missed. But then when you compare this with the 2024 highs, Senco was almost at 650, 700 in 2024 until yesterday. the stock was almost at 320, 330 mark. So it is still off by 50% from its previous major highs. So I think in that sense, this could probably start to indicate that we are looking at a major trend revival on the upside. The only catch over here is that after this kind of a gap up move, there's bound to be a point where the next 1 to 3 days, the stock, the intensity of the uptrend mellows down significantly. The stock just goes into a consolidation. So one has to be ready for trying to use minor dips, say 10 odd points, 10, 15 odd points as an opportunity to add further for someone who's looking at this kind of a time frame.
Okay. All right. What we'll do is we'll slip into a very short break and we'll continue conversation with Kunal and our other guests who will be coming on the show. So stay with us here on ET.
Back with closing trades and slight pressure on the Nifty as we speak as well. Select pockets of the market, of course, doing very well. But let's get a better picture of the fundamentals underlying in the market right now and what that spells for the market in the near to medium term. To discuss that, we have Mr. Amit Premchandani, the Senior Vice President and Fund Manager of Equity at UTI MF, joining us on the show. Mr. Premchandani, hi, good afternoon, and thanks for your time. First up, give us your reading on the way the markets have performed amid the updates that we've received on the Q3 front from banking names, from consumption names. While they have largely been okay, pretty decent, it's not reflected on the overall market move. How do you see the market panning out in the near to medium term? What kind of move can we expect?
Thanks for the question. In terms of the updates that we have seen, clearly banks and the larger BFSI space, the updates have been positive. Over the last few quarters, we have seen consistent regulatory relaxation in terms of improvement in liquidity, reduction in repo rates, and policy relaxation in terms of regulatory requirements for banks and NBFCs. Clearly showing the desire of the regulator as well as the government to push for growth. This has also led to the credit growth moving higher to double digits now, and most of the banks which have reported the updates are reporting 12 to 15% credit growth, which is significantly higher than the last quarter's or last year's numbers. So we will see an uptick in credit growth in banks as well as NBFCs, although banks may still report some margin erosion this quarter, but the erosion in margin will be very limited. And as far as asset quality is concerned, especially for banks, asset quality environment continues to improve. There was some concern on credit cards and unsecured loan, but that has also passed us. And we will see continuous improvement in slippage number as well as credit cost numbers in banks, especially. As far as NBFCs are concerned, although the unsecured part of business loans still remain an overhang and microfinance still remain an overhang, but margins for NBFCs, unlike banks, should see some improvement this quarter, given that they are net beneficiaries of a lower rate environment in the initial phase. As far as consumption sector is concerned, it's a mixed bag. Discretionary consumption is seeing some uptick, while the staple-based consumption or FMCG sector continues to see mid-single-digit kind of a growth. As far as the market is concerned, we think last year has been good for a large cap and subdued for small cap, and it was largely to do with the fact that the starting point of valuation for last year was very high for mid and small cap and slightly expensive for large cap. And hence, large caps have done much better than mid and small cap. Even going forward, we think large cap should continue to do better than mid and small cap, given that even the earning trajectory or earning trajectory over the next year is expected to be around mid-teens for the overall market. And whatever numbers have been reported till now for this year, mid cap earnings have been better, large cap earnings have been in line, and small caps have seen significant cut in earning estimates. So we'll continue to see market driven largely by large cap, then mid cap, and finally small cap.
Okay, so that's your take on the market. Mr. Premchandani, talk to us about what you've made of some of these consumption updates that we've received so far. We've had Godrej consumers, we've had on the retail side, Trent and Avenue both. And then, of course, from the broader consumption, you've had some of the jewelry names, Titan, Kalyan Senko. Anything that stood out to you particularly? And secondly, do you believe that now is the time, on the back of the GST cuts playing out and demand improving, do you think that it's a turnaround story playing out for consumption now?
So thanks again. Over the last 1 year, we have seen policy push in favor of consumption. If you see the direct tax cut in the budget, then the indirect tax cut in the form of GST, and combine it with the RBI policy rate cuts of almost 100 basis point, all these are a boost to consumption. These policy measures operate with a lag. The GST cut has come only during November. So you will see the impact of these policy measures starting off with Q3 and more in Q4 and FY27, which should improve consumption. However, we think that the large improvement or large impact of these policy measures would be in discretionary consumption, especially large ticket consumption, which is largely represented in the listed space through automobile sector. So we are positive on the automobile part. We think that the cycle has turned, and we are in the early stage of the cycle, especially in the passenger vehicle segment. So consumption revival should reflect more in the automobile sector and other parts of the discretionary consumption, and less with the staple sector, where we see that consumption growth will continue to hover in mid-single to high single digit.
Okay, so that's on consumption. Also, talk to us about your take on the financials updates that we've seen so far from banking, NBFC, and PSUs. Tell us, in your opinion, what do you think is going to drive the next growth of, or the next round of rally within the BFSI basket?
So as the monetary cycle played out over the last 1 year, the initial phase of monetary cycle leads to erosion in margin in banks, given that after the repo rate cuts and the retail loans are largely linked to repo rates, private banks have much higher exposure to retail loans, and hence the margin decline in private banks was high in the initial phase of the rate cut cycle. And this rate cut cycle benefits NBFCs immediately because their cost of fund goes down, and large part of the NBFCs, excluding the housing finance, have largely a fixed rate loan book. So they see a margin uptick in the initial phase of a monetary easing. This will start to somewhat reverse next year, in the sense the trend. Private banks margin decline will stop if there is no further rate cut, and or it may gradually start to bottom out and improve in the second half of next year, while the benefit of lower rates in NBFCs would have already played out. So we think that private banks and banks per se would be a significant beneficiary of this upcycle in the financial space next year relative to NBFCs. Valuation is also much more comfortable in banks, especially private banks. And growth acceleration is also likely to, which is already visible in the updates that we have seen, is likely to accelerate further in banks, especially private banks going forward. Asset quality cycle, which was somewhat of a concern, initial concern last year, especially in unsecured loan. As far as banks are concerned, that concern has abated significantly. Even large part of NBFCs are unlikely to see any significant impact on the asset quality side. And Microfinance, which has seen a significant impact on asset quality, is at the last stage of that concern on asset quality or credit cost. They will also see some improvement going forward. So we think that banking as a sector, including banking and financial services as a sector, especially on the lending side, has valuation on its side. Growth is likely to accelerate, and they're adequately capitalized to participate in that growth. We think that that is one sector where we are very positive on as far as the funds that I manage.
And Mr. Premchandani, talk to us about how you are viewing IT right now. It's had its fair share of ups and downs, but of late, it's the mid-cap end of the IT basket that's doing very well. We've seen a very good move today as well. And overall, we've seen a little bit of a recovery coming back to the IT space. Is this a sector that you're viewing positively right now?
So IT as a sector has seen significant pressure last year, mainly because of the AI theme-led rally which had happened in US, and Indian market or Indian IT players were considered to be immerse AI, given that in the initial phase of investment in the AI uh, IT services, which is core of Indian IT companies, do not pay a significant part. As the AI investment tapers down and enterprise try to figure out how to use AI in their businesses, the use of Indian IT services will come into play, given that they are the one, or the IT services companies are the one which will start deploying that AI in an enterprise framework. Right now, we are only seeing AI being deployed in a consumer framework. At the enterprise level, the implementation has been pretty limited. And as the implementation of artificial intelligence driven AI driven implementation starts picking up, Indian IT services should see a pickup in terms of growth. We have already seen deal size, deal momentum to be strong, especially over the last few quarters in the IT services space. Uh, the deal momentum has been largely driven by cost takeouts, but we have heard initial commentary from the Indian IT services players that even discretionary consumption is marginally picking up. As these deal get converted into revenue, we will see that reflected in the Indian IT services companies. Please note that Indian IT services companies have a free cash flow yield anywhere between 4 to 6%, especially the large cap, and they are very generous in terms of payment of dividend. So, in terms of valuation, they are very comfortable right now, and any uptick in growth numbers is not really priced in. So, as far as the funds that I manage, I'm quite positive on IT services, especially given the valuation that they are in.
Okay, so looking optimistic over there. On that note, Mr. Premchandani, we'll let you go. Thanks once again for taking the time out and to speak with us. Thanks so much.
Thank you.
Okay, viewers, let's shift focus. And we've spoken about the top Nifty gainer that's tightened and a 4% move over there. But time now to highlight the top Nifty loser, and a 4.25% cut is something that we're seeing on Cipla today. And here's why. The US FDA has issued Form 483 with 9 observations to Cipla's Greek arm on the tumor drug in the US market. And Meryl is here with more details on what these observations are and why such a drastic move on Cipla today. Meryl.
Well, yes, Cipla stock is facing tremendous pressure in the market today, and the reason for this is that Pharmathen, Cipla's subsidiary based in Greece, has received a US FDA Form 483 along with 9 observations. Now, these observations relate to manufacturing and quality practices, but what's important to note here is that Pharmathen's facility manufactures lanreotide for the US market. Now, Cipla itself does not manufacture lanreotide, but it is a big portion of Cipla's overall business. In fact, last year, the company saw a supply crunch in lanreotide that it had just begun to recover from. Cipla's market share in this segment in North America before the supply crunch stood at 30 to 35%, which saw a sharp dip and has only started to recover since, when at the end of the last quarter, the market share stood at only 22%. These supply issues last year had a clear impact on Cipla's overall sales as well, with the company's North America sales down almost 2% year on year. For a company as big as Cipla being affected by just one product, this is a huge deal, and the market is already seeing this. The stock is down almost 5% today.
Okay, Meryl, thanks so much for taking us through that. So yes, a 4.25% cut on Cipla as we speak. But on that note, time to slip into a very short break, and lots more to talk about, and more importantly, to decode the kind of market move we've seen. We'll be doing that on the other side of the short break. So stay tuned. Back with closing trades, and moving away from the market for a bit and telling you everything that's happening outside of the world of equities. The Delhi High Court has asked the RBI to respond to pleas about the misuse of borrowers' personal data by digital lenders run by NBFCs. My colleague Charu is here with more details on this entire matter. Charu.
The Delhi High Court heard a very interesting petition today where the petitioners said that violation of borrowers' right to protect their data has taken place through NBFCs using their digital apps. However, the RBI already has a 2025 circular in place where the norms have already been decided which deal with any sort of grievances of violation of privacy or data of the borrowers has taken place. However, the Delhi High Court asked the Reserve Bank of India to submit an affidavit, their steps that they have taken to protect the users or borrowers from violation of their private data. They have also asked to submit in the affidavit the steps that it took for the implementation of its 2025 digital lending directives and any grievance steps or grievance redressal steps that they might have taken since the inception of their norms that came out in 2025. Now, this is a petition that has been filed in Delhi High Court recently, and no order has been given out by the court. Only an affidavit has to be placed by the RBI within 6 weeks.
Okay, Charu, thanks so much for taking us through that. So yes, those are the latest updates in this case right now, and we'll be bringing you more as and when we get them. But let's shift focus to the markets once again. We have Mr. Aditya Arora, founder and multi-asset research analyst at Analytic.in, joining us to give us a better sense on the market right now. And Aditya, let's talk about some stocks where we are seeing some swings today. Yes, Titan and Cipla, of course, but talk to us about your chart check on Maruti Suzuki, a 3% cut, Max Healthcare also 2.25% cut. How are these stocks shaping up on the charts, and if you're spotting any weakness here at all?
Very good noon to you and to everyone. I think the market structure has been a little weak and we are seeing a little selling across the board. Whether you talk about the large caps or mid caps, the selling is there evident. But when we are talking about two stocks, Maruti and Max Healthcare, then I think Maruti's today's dip was actually bought into, and we have seen quite a bit of recovery out there. So this candidate doesn't look so bad. We should wait for a breakout, and the stock is trading at 52-week high. In last 2 weeks itself, we have seen very good volume accumulation, and the stock is trading above important moving averages. So I don't think that the trend is too bearish in Maruti Suzuki. It's a buy on dip candidate at 16,800. One should keep stop loss at 16,200, and the targets one should watch out for are 17,400 to 17,500.
Okay, so that's the take coming in on some of the stocks that are in focus today on the weaker side. But this is from the Nifty 50 group of stocks, just delving deep to the broader end of the market and taking a look at what's happening over there. It seems like Tata Elxsi, a 10% uptick over there. Elecon Engineering is up 7.5% ahead of its earnings tomorrow. You have KPIT Tech, Sonata Software, Tata Technologies. So clearly, it's the Nifty midcap, it's the IT midcap basket that's doing very well for itself. Kunal, anything standing out particularly from this basket, Tata Elxsi, KPIT? If you had to rank these in terms of the strength on the charts, what would it be?
So I think after today's move, Tata Elxsi would be the better one. Okay. From the emerging mid-cap names, emerging I would say in the sense in terms of prices. KPIT Tech is still yet to break past about the previous immediate hurdle point. I think that's around 1240 marks, so maybe another 30 points on the higher side for KPIT Tech, and that's where we may probably get that one leg of confirmation for the stock price. from the earlier names, in terms of the ones which have been doing very well, but then the ones which had gone through a mild corrective phase, Coforge is managing to make a good comeback. Persistent, the stock making a very strong comeback today, and I think if I'm not wrong, almost recuperating 75 to 80% of the losses the stock had seen in the last 1 month. Broadly, I think from 7,000 6,800 levels, the selling had started for Coforge and had moved down towards 5,800 6,000 odd levels. So it's managed to make a very good comeback for itself. So these are the few odd names on the mid-cap ones which looks attractive.
Okay, so that's on the mid-cap end of the basket. Aditya, talk to us about some stocks that are not doing well from the broader end of the market, and that's Ola Electric once again seeing a 3.5% cut. M&M Finance is lower by 4%. Any take on these names on the charts?
Sure, I think if we observe the complete auto pack, then the trend has been little sideways. And if you talk about Ola Electric, then that stock is little news-based counter. Often we see lots of news and the stock is jumping up, but soon the profit booking comes into the counter. But overall trend structure of Ola Electric is not so great, and it's a volatile stock. The stock is trading at 52-week lows almost, although the selling seems to be almost absorbed. But we'll wait for signs for clear-cut recovery as the stock is volatile. I'm not bearish on Ola Electric, but we should wait for some proper signs, technical patterns for the stock to turn extremely bullish. And if you talk about Mahindra and Mahindra, then I think it's a good candidate on, just like Maruti, it's a good candidate of buy on dips. And the stock is testing its breakout zone of 3,700, where lots of put writers are also active. So this is an accumulation zone for the counter. The trend seems neutral to bullish over here. One should keep stop loss at 3650, and the target should be 3780 to 3820.
Okay, I'll switch focus though. In a crucial hearing yesterday, APTEL sharply questioned the way market coupling rules were framed, saying that the power regulator should have acted quietly and independently without theatrics. In submissions before the bench, the Indian Energy Exchange, which is IEX, urged that the order be cancelled or at least stayed, or rather the regulation be cancelled or stayed until the case is decided. We spoke with Rupesh Sankhe, who's the Vice President Institutional Equity Research at Elara, over this development. Listen to what he had to say with regard to this one.
We have seen multiple derating has happened in IEX valuation. So earlier it was trading at close to 45-50 P multiple. Now it has corrected to 27-28 P multiple. So mainly because of a market coupling impact. So certainly a favorable outcome, or if members of CRC decides to withdraw this market coupling, that is going to be a huge positive for IEX, because in business as usual scenario, it's trading at close to below 22 times P multiple. If we take a market coupling into consideration, the DAM as a first product from Jan, which close to 35% of the overall volumes, then I think a lot of multiple EPS downgrade is definitely there.
Okay, so that's the word coming in from Elara Capital on IEX and this entire market coupling case verdict that we were hearing yesterday. And remember, the stock was up about 10%, slightly more than that yesterday, continues its run, about a 5% uptick on IEX today as well. But we quickly want to shift your attention to the flashes on the bottom of the screen. We have the December general insurance numbers that have been released. The General Insurance Council has released the December premium income data. For Bajaj, the general premium is about 14.15 billion rupees. So that's 1,415 crores, which is up 6.3%. New India Assurance premium has seen a growth of 16.6% on a year-on-year basis. So we'll fire that stock for you, New India Assurance. Let's also talk about general non-life insurance premium. That has seen an uptick of 13.7% year-on-year. Names like Go Digits, general premium has gone up by 22.2%. So in fact, sharp spike coming in on New India Assurance. Want to see what Go Digit is also doing. Their general premium is up 22.2% on a year-on-year basis. Other than that, you have ICICI Lombard. The premium has gone up by 16% year-on-year. Bajaj general premium also up 6.3% on a year-on-year basis. For Star Health, the premium growth has been 23.7%. Go Digit is up 22.2% like we were talking about, and Niva Bupa is up 52.7%. In fact, I'm very interested in seeing what the stock of Niva Bupa is doing right now, if there is any immediate reaction to these numbers that we're seeing right now. And yes, there is very massive uptick coming in on that stock, a 3% surge on Niva Bupa on the back of this 52.7% year-on-year uptick coming in its insurance premiums. Kunal, a quick chart check on Niva Bupa, a 3% uptick. What are the next levels that you're spotting here?
So it's yet to break past about the immediate hurdle. The first hurdle for Niva Bupa is around 78.5 level. This was the high the stock had tested in the month of November as well as December 2025, and from there the stock had come back towards 74, 72 kind of a zone. So we need to see a break above 78.5 levels for Niva Bupa as a first level of a breakout. But if that happens, then I think we could be looking at a point where the stock may even look to climb back towards 82.5 to 85 mark. So these are the two important resistance points to watch out for Niva Bupa.
Okay, so that's that with regard to general insurance and Niva Bupa in particular. That stock now just cooling off a tad bit after hitting those highs of the day. What we'll do is slip into a very short break. We'll continue conversation on the other side. Stay with us here on ET Now.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Anytime is a good time for multi-asset allocation funds. Invest in a mix of equity, debt, gold and silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
In association with SBI, the banker to every Indian truly.
पैसा लगाना है तो सेंचुरी प्लाइ क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाइ क्लब प्राइम, रहो बेफिक्र।
देखिए आप तो राजा हैं, बस एक आवाज लगाई और सारे काम हो जाते हैं। ऐसे ही IDFC फर्स्ट बैंक की ऐप से NRI कस्टमर्स जहां भी हैं वहां से उनके बैंकिंग के काम हो जाते हैं। फिर क्या घर बैठे बैठे अकाउंट खोलना हो या इंडिया में इन्वेस्टमेंट्स करने हो या फिर इंटरनेशनल नंबर पे UPI एक्टिवेट करना हो तो यहाँ से कर सकते हैं। ये देखिए बात समझ गए ये भी।
2026, take notes. Manifesting for my little Miss Sunshine, tickles and giggles. Also want to be a biker chick this time. And dear 2026, only love for my people and myself to manifest my best life. Nature's cosmic energy.
Now mine, natural diamond intention pendants.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने। मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
Exquisite comfort, bespoke hospitality, culinary excellence. That's Air India now.
Back with closing trades, and the consumption space, like we've been highlighting, has been doing very well today. And one such stock from the QSR space is Jubilant Foodworks, that on the other side is seeing a little pressure. You have a 1.5% cut now on Jubilant Foodworks, and almost at the day's low is where the stock is right now. Lots to talk about in terms of its Q3 updates, because if you take a look at their revenue that's reported, 2,438 crore rupees seems slightly slower than what the street was estimating. Standalone revenue of 1,800 odd crore rupees, slightly in line line with what the street expectation was. But what's really ailing this stock right now is the like-for-like number that has come out. The like-for-like growth number has come in at 5%, which is slowest since quarter 3 of FY25. So that's about 4 or 5 quarters of slowness that we've seen coming in for Jubilant. But mind you, a lot over here also has to do with the fact that the base has been quite elevated, and on the back of this, this 5% number, yes, is slightly lower than the 7% that the street was working with. But some analysts also believe that it's not all that bad for Jubilant, and they continue to be positive over here. The net store addition looking very healthy, and that is the reason why Jubilant Foodwork is seeing a little bit of a pressure. Also, the other reason today is the price cuts coming in from brokerage houses like Jefferies. They've maintained their buy rating but trimmed the target price. Goldman Sachs has also maintained neutral but trimmed the target price. And Elara Capital and Morgan Stanley, they continue to hold their outlook. They've maintained buy and maintained overweight rating respectively, and price targets have also been maintained by Elara and Morgan Stanley. But it's price cuts from Jefferies and Goldman Sachs that look slightly concerning for the stock. Let's refocus and get into a conversation to understand the market breadth better. We have Mr. Aditya Shah, founder at Hercules Advisors, joining us on the show. Aditya, hi, good afternoon, and thanks for your time. You know, we've been talking about all of these updates since morning. We've had a bunch of consumption updates yesterday and today, and over the course of the weekend and before that last week, it's only been the banking and NBFC numbers that we've seen. Right now, we've seen numbers coming in from insurance companies, so there's a lot of triggers in the market right now, but the market is not largely reacting to a lot of these news and these numbers coming in. What do you think is going to be the next trigger for the market to react? Is it actually going to be the quarter 3 earnings, or do you believe that on the back of these updates, the street is largely penciling it in already?
Good afternoon. I think that the market already knew that stable Q3 numbers would come in. The banking sector has grown by about 10 to 15%. The deposit growth there is at about 5 to 10%. If you look at consumption numbers, if you look at the gold companies, they've seen a volume degrowth. However, the revenue growth on the back of higher gold prices continue to be at about 40%. A little bit of slowdown within the QSR space is what we are witnessing. However, steady results is what I expect in Q3 from all of these companies. I expect Nifty 50 growth to be at about 5 to 10%, and individual companies will grow on themselves. I think the biggest trigger in 2026 for the market will be the Indo-US trade deal. If that really happens, that really lifts the sentiment of the market, and the market will then move on. If we don't see a trade deal, I think we will remain range bound, and stock specific is something that you should go for. However, in the longer term, we remain positive on the market. The market will continue to do well. Consumption, banking, financial services, chemicals, cap goods sector, these are something to look out for. And IT obviously continues to be a contra bet for us.
Okay. Aditya, you know, the other set of stocks which have declared numbers, or rather at least given us a sense. Firstly, it's been a while, so good having you here. You know, the other set of stocks which I was talking about, which have declared numbers, is banks and NBFCs. The growth there underlying remains quite robust. How would you play that theme? Would you play it through the PSU banks, which seem more reasonably valued in comparison to some of the private sector banks? Would you play it through the small finance banks, where the risk seems a little bit larger in terms of the credit cost? How would you play that?
So from my perspective, very happy with the banking sector. The banking sector is telling you that the growth is at about 10 to 15% in terms of AUM or loan growth, and 5 to 10% on the deposit side of it. So there's a three-pronged strategy that I employ. Larger banks, HDFC, ICICI, they will continue to do exceptionally well. They will be steady compounders in your portfolio. Then you look at smaller banks, where smaller banks like CSB Bank or a Federal Bank continue to do exceptionally well within their gold loan portfolio. Mind you, gold prices moving up gives a lot of traction to these banks. So that is the smaller bank side of it. Ujjivan companies like Ujjivan, which have also declared their NPS, they have seen improvement, and it sharply tells us that the micro lending cycle has abated. It is not turned around, but it has abated. The NPS have abated there, and now we should see a turnaround in the next 2 to 4 quarters. But they are highly risky bets, and only highly risky investors should look at that. And finally, within the PSU bank space, Of course, we've seen SBI cross that 1,000 rupee mark, and I continue to feel that within the PSU bank space, only SBI is my top pick. They have scale. They will continue to grow at about 10 to 15%. And from my perspective, NPA asset quality there will also be good. So from my perspective, PSU banks, I will only stick to SBI.
Okay, I beg your pardon because we've got two Adityas on the screen now. So Aditya Agarwala, or rather Aditya Arora, I beg your pardon. Aditya Arora, what's your take with regard to Gopal Snacks? Give us a sense of that. The stock has moved 3.5% today in trade. How is it looking on charts?
Hi Harsh, I think you have picked a very good candidate in FMCG basket. We have seen underperformance in the complete pack, but this stock has been doing pretty well since last 2 weeks, and it's also accompanied by good volumes. This stock seems a bullish candidate as today's price action is pretty encouraging. This is bullish at 334. Stop loss should be kept at 320, and the target over here is 345 to 360.
The reason, Aditya, why we've picked this particular name to ask you is not only Gopal Snacks, but a bunch of these snacking and namkeen mixes companies that are listed. Motilal Oswal has come out with a note on all of these processed foods, wherein they're saying that the food processing industry is expected to grow at a CAGR of 9.7% from FY24 to FY27. They've initiated coverage on Bikaji Foods with a buy rating and target price of 900. Gopal Snacks that we were just talking about initiated a buy with a target price of 400. Pratap Snacks 2 initiated buy with target price of 1500. But for Mrs. Bector's Food, they've initiated a neutral with a target price of 280 rupees per share. So, trying to get a fundamental sense out of this, Aditya, talk to us about the view that you have on some of these names, and especially the kind of incremental growth that we're expecting to see here now that the GST on namkeens and packaged foods has also significantly been brought down.
So from my perspective, consumption continues to be a defensive theme. However, valuations across the consumption space continue to be really very punchy and really very expensive. So from my perspective, I expect these companies to grow at about, let's say, 10 to 15% on their profitability. However, the valuations are so aggressive that I don't see a case for fresh investment as of now. Of course, mutual funds who want to be defensive will continue to invest in these stocks. But from a purely valuation perspective, I will tend to not invest in all of these companies. Rather, I would look at something like an ITC, where ITC is a conglomerate which also has their FMCG business, which I think is doing pretty well. So from my perspective, I don't have a positive view on this stock. Given the correction in ITC because of various reasons, I think that continues to be my pick within the FMCG space.
Sorry, I'm going to cross question you on this one. Only 24% of ITC's profit after tax comes from, or profit before tax, I beg your pardon, comes from the FMCG business, while 45% of the top line comes from there. So really it's margin dilutive for ITC. Would you therefore place your bets on FMCG where growth has slowed down? Multiples are obviously on the higher side amongst peers, while ITC trades at a lower multiple. But growth is slower, and it's margin dilutive for ITC.
So it's all relative. From where they were 2 to 3 years ago, ITC is in much better space within their hotels business, within their FMCG business. So broadly, I'm talking about how the improvement is taking place. Of course, I'm not talking about profitability as compared to other peers. I'm just looking at ITC. The main driver here is a lot of scope for profitability turnaround within the FMCG space is available, and that should happen in the next 3 to 5 years as the company continues to invest aggressively in that business. So from my perspective, given the valuation comfort that I have got, and given the fact that the strong dividend yield also exists on ITC, and also a turnaround in the FMCG space is in progress, I think I have my bet is already on ITC.
All right, what we'll do is take a pause here, take a quick break, come back, continue conversation with all of the three gentlemen we have on our panel today. Stay with us.
Indian Hotels came under pressure after Morgan Stanley downgraded the stock to equal weight even as it raised the target price. The brokerage says the RevPAR cycle is improving, but upside is no longer surprising. EPS estimates for FY26 to 28 have been cut on soft margins.
Lock-in expiries triggered mild pressure across select stocks today. Meesho fell 5% after a 2% lock-in expiry. Meanwhile, stocks like Equus and Vidya Wires and Tata Capital saw a 1 to 2% downtick on the back of a 2 to 4% stake being unlocked.
Lodha also upbeat after posting its best ever quarterly pre-sales and achieving 70% of its FY26 guidance. Meanwhile, Godrej Consumer flags improving demand, guides for double-digit revenue and volume growth, and expects margins to normalize. Back with closing trades, last about half an hour left for the market. Let's take a look at some stocks that have been moving, and let's talk about Indian Hotels. This stock has been deeply under pressure ever since the get-go today on the back of a brokerage note coming in from Morgan Stanley, wherein it doesn't look like a very positive note because Morgan Stanley has downgraded the stock to an equal weight from its earlier overweight rating. The target price has been cut to 780 rupees from 811 rupees earlier. The RevPAR cycle is healthy, but limited upside there is very limited upside surprise is what Morgan Stanley is flagging off right now. And they also say that the industry RevPAR is expected to grow 9 to 10% in Q3 of FY26. On the flip side, IHCL standalone RevPAR is expected to be only 8% due to a Mumbai heavy portfolio, and a lot of its geographic concentration is big in the MMR region. They also say that standalone and consolidated EBITDA growth of roughly 10% is expected on a year-on-year basis, and over FY26 to FY28, the EPS has been cut by 2 to 3% on lower RevPAR and margins. They also say that the target price has been shifted to their base case that they were penciling in earlier for IHCL at 28.5 times EV to EBITDA multiple. So that's the take coming in from Morgan Stanley on Indian Hotels. There has been a downgrade in the stance as well as a price cut on Indian Hotels, and that's the reason why the stock was trading lower by about 2 to 2.5% at around 12 p.m. But ever since the midday mark of the trading session, it's seen a little bit of a recovery and right now trades with cuts of 1.3%. Kunal, a quick chart check on Indian Hotels and any other smaller hotels. Like we spoke to Chalet Hotels earlier in the day. You have Ventive, you have some more hotels. Is there anything that looks better than IHCL right now on the charts?
So I think over the last few days, what has happened was many of the hotel stocks which are trading above their 200-day moving averages, the likes of Chalet, Lemon Tree, etc., even these stocks have gone through a correction. Indian Hotels apparently was the one which was already below its long-term moving averages since the last, I think, 2 or 3 months specifically. But I believe that now after this selling which has happened for Indian Hotels, the stock at 700 to 720 range where it's trading right now, I would probably sense that the indicators are a little bit more oversold for the stock price than what it was in the previous leg of the downtrend. I would sense that this could actually be a good zone where traders could go for a contra buy. We've historically seen that whenever such kind of news flow happens into the stock price, when there is a downgrade of sorts, especially at a point when the stock has already been into an underperforming spree, that generally becomes a point where the stock eventually over the next maybe week or so tends to find a short-term bottom and goes into a bounce back mode. So I would sense that this dip could be a good buying opportunity on the contrarian side for Indian Hotels.
Okay, very interesting. Aditya Shah, where do you sit on in terms of hospitality? How would you play it?
So from my perspective, Indian Hotels continues to do exceptionally well. The future capexes that are going to come up will continue to drive the growth for the company. However, paying 60 times multiple for a company which is in the hotel sector, which is very cyclical in nature, is really very difficult. So from my perspective, I tend to now, for the time being, avoid the entire sector per se. Purely basis, valuations are extremely aggressive, and we are in the middle of the cycle where either we are not in a clear top has not been made, or a clear bottom also is not there. From my perspective, I would tend to avoid this sector entirely. Fine.
Okay. How else would you play consumer then, Aditya?
So as I said, consumer is a very defensive sector where valuations are extremely aggressive. So our singular bet within the consumer space continues to be ITC. We are looking at 2 or 3 bets which are in the process of turnaround, but nothing concrete per se. So ITC is a pseudo FMCG company that we have our bets on now.
But Aditya, understood, you are bullish on ITC, but the one question that pops up in my mind is this entire excise duty that we've seen on tobacco. And the day that announcement came, stocks like ITC, you had Godfrey Phillips and VST Industries, they were battered in trade, and the biggest cut was seen on ITC on an intraday basis. Now, across the board, we're hearing chatter that ITC will need to, at minimum, take a 15 to 30% price hike to just be able to withstand this excise duty impact. Is that in no way deterring your view on ITC at the moment?
So time and again, the same story plays out on ITC and the cigarettes business per se. The cigarettes business is government's cash cow, and the government will continue to tinker with taxation. But from our perspective, we feel that the company is really very strong. The cigarettes business continues to be really very strong. A hike in cigarette prices would hit volumes to some extent, but we don't feel.
I believe we've snapped that line with Aditya, and we'll try and reconnect with him. But let's once again revisit what's happening in the market. If there's been any turnaround for some of the stocks that were not doing all that well, Cipla still continues to be under pressure, of 4% cut over there, as is the case with Maruti Suzuki. No meaningful recovery over there from the day's low. Slight uptick on Maruti Suzuki from the day's low, but nothing too incremental because that stock is still more than 2.5% in pressure as we speak. So is the case with something like an NBCC, Hindustan Copper. Kunal, interestingly, some of these infra names have started seeing a little bit of price erosion. On the flip side, we're hearing back-to-back orders. At least fundamentally, the stock should have been doing well. But there's weakness on names like NBCC, for example, today. Your chart check on NBCC?
Yeah, so this I think generally happens in a profit booking mode because staying in the last 3 days where NBCC has cooled off, NBCC, KEC, etc. You look at the volumes. For example, NBCC today has clocked volumes of around 80 odd lakhs. The volumes when the stock was actually moving up higher, when it moved from 115 levels to 125 thereabouts, was in the tune of 4.5 to 5 crores. Now, when you look at that kind of a jump in volumes on the way up and then the lack of volumes on the way down, it indicates that this may not be a very strong downward trend, but this could just be a pure mean reversion for the stock prices. So I think in that sense, I would actually believe that this, this may be a good counter opportunity. If not today, maybe I think over the next 1 or 2 days, if there is a further mild correction for the stocks, I think that could throw up a very good risk reward as well as a confident buying opportunity for many of these spaces.
What about an M&M Finance, Kunal? Nearly 4% lower, and it seems that it's giving up a lot of the gains that it made, right? Especially recently. What's next on this one?
So what was happening, Harsh, was that in the month of October, when M&M Finance made a high which was around 380, then it made a subsequent high of 400.
Yes.
The divergence was there on the indicators. The RSI actually made a lower low and the lower high, and the prices made a higher high. This, in classical sense, we call it as a divergence, where the momentum is slowing down for the stock price. It doesn't mean that the stock price is going through a reversal or a major price correction, but it's just that the last leg of the rally which has happened for the stock price is now on the back of receding indicators, which means that the stock would take a pause over here for maybe another few more weeks. So I think in this regards, the strategy over here is to try and wait for that mean reversion to try and complete for M&M Finance. That could happen once the stock falls below the 340 mark. So if you ask me, I think I would probably wait for at least another 18 points to 19 points drop into the stock price, say potentially in the next 1 to 2 weeks or maybe more than that. And I think at 340 levels or slightly below those levels is where the risk reward would start to open up extremely positive for the stock.
Okay, so that's on some of these stocks that have been in focus. We've got Aditya Shah back. And Aditya, talk to us about your view on the pharma space. Now, yes, pharma has seen its own fair share of ups and downs, but today it's names like Torrent Pharma, that's up 4%, Wockhardt, Ipca Labs, Mankind, all of them are doing well. So, Aditya, what I really want to understand is what could be the next growth lever for this pharma group of stocks. The CDMO space has done increasingly well. Do you think the CDMO space still has more legs to that rally, or do you believe this entire semaglutide, weight loss or immunotherapies is that going to be the next hotspot within the pharma pack?
So pharma itself has many subsectors. Within the subsector, CRAM CDMO space continues to do exceptionally well. That is one place where everybody should have good bets. There are companies like Syngene, there's company like Piramal Pharma, there's company like Suven. All of these companies will continue to do exceptionally well. So I'm positive on the CRAM CDMO space. Once we see the API space, companies like DV's, Laurus, Newland, these companies will continue to do exceptionally well and grow at about 10 to 15%. That's my second bet within the pharma space, the CRAMS area, the API space. Third bet continues to be generics. In generics, pricing pressure always comes in. We've seen Cipla get a Form 483 today because of the data integrity issues as well as the compliances that they've not been able to take. So from my perspective, I'm very cautious on the generic side of it. Positive on the CRAMS CDMO and the API space. Positive on the domestic diagnostic space as well. Companies like Krishna Diagnostics, which are into B2C, those companies are also looking really very interesting. So selectively invest in pharma, look at subsectors, and within that subsector, a lot of stocks are really available where you can invest.
Okay, so that's the take coming in on the pharma space. Kunal, let me chart check on some of these names that are doing very well today. Torrent Pharma is up 4%, Wockhardt is up 3.5%. Any chart check, or in fact, what are the levels that you're spotting? And is this rally sustainable on names like a Torrent Pharma, 4% higher today?
I think so, because very high probability over here, Sneh, because when you see volumes being consistent with the price uptake and stocks breaking out in new zones on the higher side, specifically for the likes of Torrent Pharma, that generally indicates that these are strong, not just short-term speculative volumes, but these are more of investors or longer-term traders trying to come back into the stock price. That generally is a very encouraging sign, and it's good to see names like Torrent Pharma showing those kind of signals. In terms of candlestick pattern yesterday and today, it's a classic Maru Bozu kind of a candlestick pattern, which has a strong bullish implication on the stock price in the medium to long term. So I believe in that sense, it's a stock which looks fairly attractive. Wockhardt Pharma, I don't track it very closely, but looking at the charts, it looks like that the stock and the near-term resistance of 1500, 1550 could be challenged this time around for Wockhardt Pharma. So it's a stock which is due for a breakout, had shown good price activity, I think 2023-24, but then maybe I think on the short-term charts it could come back into a near-term up move if it breaks past over 1550 levels.
Okay, let's switch focus now to the aviation space, in fact, and to an unlisted name within that aviation space. In an exclusive conversation with ET Now, founder and CEO of Akasa Air discussed about the listing plans for the company. He sees the company getting listed in the next 2 to 5 years, he says, and he believes that the listing needs to be post the company turning profitable and not just basis the top line. Listen in to a slice of that conversation.
What I've said is a 2 to 5 year time horizon, and I said that maybe 2-3 months ago, so you can subtract 2 or 3 months from that 2 to 5 year time horizon. But Sajid, it's more than just the top line, right? I mean, investors are not necessarily investing in a company that just has top line growth. You have to show bottom line growth as well, and that will take a little bit of time. And so we maintain this 2 to 5 years, or a little less now than 2 to 5 year horizon, because we want to solidify not just the top line, but you want to solidify your operating cash generation. You want to solidify your EBITDA margins, your P&L, PAT positive, etc., etc. And that's just going to take a little more time.
Okay, that's the word coming in, the exclusive word coming in from the top boss at Akasa Airways. But let's shift focus, and time for an ET Now exclusive now. Telecom players may seek legal route against discoms in the underground cabling issue. Charu is here with more details on this. Charu.
The Department of Telecommunication in the year 2024, working on the principle of only digging once, came out with right-of-way rules. Now, these rules were focused on allowing the telecom players, for example, the telecom operators, internet service providers and DSPs, to be able to access underground cabling without having to pay different charges in different jurisdictions, and also reasonable charges, so that the cost of the entire operation would not hamper the research work or the burdening of the customers. That is why the right-of-way norms were introduced. After that, 18 months to almost 2 years was spent on sort of making the entire norms, in coherence with the different jurisdictions and local authorities, states and union territories. However, as per several sources that ET now has spoken to, the local authorities and private players and discoms are still reluctant to work as per the norms that have been prescribed by DOT, and several operators are now thinking about taking the legal route or the legal action against those responsible for this. They have said that while there is usually no written rejection of their application to use the underground cabling, there is usually a delay induced in the entire process. It has also been brought to light that this hampers the research work that is being undertaken for 6G operations or introducing new technology as well, because they too need some testing room in terms of underground cabling, which is not very easy to get because the authorities are reluctant to act as per the norms that are already applicable.
All right, so that's with regard to telecom, it's with regard to airline companies, and these are pockets where you don't have too many listed players, Aditya Shah, and therefore, would you at all play the trade with the limited players that you have, and would they therefore be at a disproportionate advantage in terms of the way they're able to grow their business?
Sorry, Harsh, I was not able to catch your question. Can you repeat that question?
Telecom, airlines.
So on telecom side of the business, I assume you're asking. The line is bad, but I assume you're asking for the telecom side of the business.
Bharti Airtel, Indus Towers, and the like.
Yeah. So within the telecom space, I am pretty positive on Bharti Airtel as well as Reliance. I think Vodafone Idea does require a lot of things for it to turn around. So it's a duopoly business, and within a duopoly business, Bharti Airtel and Reliance will continue to do exceptionally well. I don't particularly share a view on Bharti Infratel, so will not be able to comment on that. But my view is that Bharti Airtel and Reliance, as the duopoly continues, they will embark on a series of price hikes, which will mean that you and me pay higher ARPUs, which will mean that these companies will make a lot of money going forward. So from my perspective, positive on both Reliance and Bharti Airtel.
Okay, so positive on that space. Kunal, on the charts, Vodafone, last week Vodafone saw its own fair share of volatility, and it wasn't a largely very good week for Vodafone. But that kind of drop that we saw on Vodafone, did that make the stock any more attractive on the charts, or would you just cautiously avoid right now?
No, it made the risk reward attractive at that point of time.
Okay.
But now with the stock, not having any major follow through after that, I think it's indicative that the stock is going through a time-wise consolidation. Volumes have dropped down, so this could probably be an opportunity where traders would just want to lighten up the positions. The ones who would probably have expected maybe the news flow to be on the positive side and were disappointed, so they would probably have gotten an opportunity to try and exit the stock price. But then I think price-wise, maybe if the stock drops down to 10.5 odd mark, 10.7 mark yet again, that could be yet again an opportunity where the stock or the risk reward would start to look attractive. My sense is that the long-term charts, this is the fifth or the sixth consecutive month, if I'm not wrong, for Vodafone Idea to be on the positive side. And 5 months back or 6 months back, when this uptrend started off, the stock was at 6 to 6.5 odd levels. So after 100% kind of a jump, there's bound to be a point where the next couple of months the stock may disappoint or go into a mild correction, time-wise pause for itself. But the uptrend which has started 6 months out back for Vodafone Idea, I believe should have more legs. So maybe I think if the stock pauses in the next couple of months and recedes back to 10.5 odd levels, as I mentioned, that could be an opportunity to try and chip into the stock price yet again.
Well, very interesting. Aditya Shah, if I were to ask you the one possible sector, space, segment which could surprise on the upside, where Q3 FY26 numbers are concerned, what would that sector space be?
From my perspective, I think the banking sector will surprise in terms of asset quality. I think there will be an improvement in the asset quality across the sector. That is one of the sectors that I want to see. And I think IT results will not be as bad as everybody expects them to be. Those results will be really very steady. And I think some of the companies will also surprise by giving by upgrading the guidance per se. So from my perspective, banking, IT, and the third one, which I feel will do well, is the chemical space. They will also surprise many people who are very bearish on them.
Kunal, any favorites from the chemical space? Anything looking good on the charts?
I've not seen too many charts, frankly, from the chemical space, but I think SRF is the only one which I do track very, very closely. And especially, I think at maybe last month, if I'm not wrong, mid of last month, where the stock had broken past about 3,000 levels, that was a 200 DMA resistance for SRF. Once that was taken out, you saw the stock moving into a higher plane of 3,050, 3,100 levels, consolidated over there for the the last 1 or 2 weeks post the breakout, and now I think it's getting up for a uptrend yet again. So don't track too many stocks from the specialty chemicals at least of late, but I think SRF is the only one which looks attractive.
Okay, that's very interesting as well. Jewelry companies, Aditya, we haven't spoken about that. Just the way in which we've seen growth come in terms of jewelry. Kalyan Jewelers, Titan, both of them doing very, very well, and they're market leaders to a large extent. Would this space or segment at all look attractive to you?
So Harsh, we need to go in detail as to how this growth is coming in. So from Q3 FY25 to Q3 FY26, the gold prices themselves have gone up by 46% due to a phenomenal year for gold. So revenue growth for a lot of these companies is in the range of 40%. For example, for Kalyan Jewellers it is 42%, for Titan it is 41%, somewhere in that range for Senco Gold as well, which is around 48-49%. So what I am really seeing is that because gold prices are moving up, there is a volume degrowth for a lot of these companies. If volume degrowth is there for a lot of companies, if gold undergoes a time correction or a price correction, a lot of volume growth that has vanished will be a problem for a lot of these companies. So from my perspective, given these companies are trading at a very rich valuation, I would tend to not invest in any of these companies. Wait for some correction in these companies and only then enter these companies. Senco Gold and Sky Gold are the only ones where there has been some bit of some bit of volume growth. Those are the companies that I would tend to track at this point in time.
And Aditya, what about large box retail like your Trent and DMart? Are you looking at those spaces positively?
Trend, I don't think there is any problem with Trend per se. The growth obviously of 40 to 50% was really not sustainable. The growth coming at 18% is something that I feel is sustainable. Any company growing at 15 to 20% is what we should look at for the next 5-7 years. From my perspective, again, Trend still does not trade at any cheap valuation. Still, it is really very expensive, even after the 50% correction that it's got. I would tend to wait to invest here. Similarly with DMart. DMart is facing intense competition from the quick commerce space. It will continue to face competition, and given the fact that it is facing competition, it again trades at about 70, 80, 90 times multiple, which I don't think makes me really very comfortable at this stage. Of course, those who got the stock can continue to hold on to the stock, but I don't think there's any fresh case of investment into any of these companies first.
Okay. Kunal, Ola Electric, and we've spoken about this, a few weeks back as well, where you suggested that you're not keen because just the price action, the momentum wasn't there. Now the stock has breached 40, and we've seen a bit of a cool off in trade today, 4%, 3.5% lower. Is this now a good time? It's seen a rally, it's seen a dip now today. Is this an opportunity?
Maybe I'll wait for another couple of days more further for the stock to cool off a little bit more. I would actually sense that maybe this cool off could take the stock back to a sub 40 mark. But I think at those levels, maybe a trade could originate yet again for the stock where you can see a momentum. But this is purely a trading play. This is not something which, at least on the short-term charts, it doesn't look like that the stock is going through any kind of a major revival. Like case in point, what happened to Eternal or earlier Zomato when it was at 40, 45 rupees odd, when the stock bottomed out. Those signs are still not visible. You look at the chunk of trading volumes for Ola Electric in the last 5-7 days when the stock has moved up higher from 40 to 45 odd mark. And you try and compare this with the volumes, I think in the month of August or September, that time the volumes was almost 100 crores on a daily basis. The volumes right now are 12 crores and 14 crores. So it tells you that this is more of a trading based rally This is not something which is giving investors, maybe a new lease of life into the stock price. I think in that sense, one might look at trading opportunity, a 4-5% jump into the stock price from the sub 40 levels. That's something which one could look at. But I would specifically not look at this as a trading play. I would probably want to concentrate on Bajaj Auto, Hero MotoCorp. I think there are far better names. In fact, Maruti, I think at 3% down today, I think could probably throw up a good opportunity as a contra trade.
Fantastic. Okay, so those are some trades for you. Aditya Shah, how would you play auto?
So from my perspective, auto, I think TVS Motors and Mahindra and Mahindra, both of them continue to do exceptionally well. Those are the growth picks within this sector. They will continue to do exceptionally well. I have a slightly different perspective on Ola. In my perspective, Ola to some extent now continues to become a contra bet. If Ola is able to turn around the problems that it has got with respect to serviceability and with respect to the promoter selling, I think Ola from a peak market cap of about 70 to 80,000 crores at a market cap of 14-15,000 crores, I think it makes a good contra pick, but this is only for high risk investors. The signs of turnaround need to be really very clear for you to make a decent amount of money there. So high risk investors can consider Ola Electric. However, within the auto space, TVS Motors, Mahindra and Mahindra, those two companies continue to do exceptionally well.
Okay, so that's some of the stocks that's looking good to Aditya from the Auto Pack. Aditya, on that note, we'll let you go. Thank you so much for taking the time out and speaking to us today. Okay, viewers, about a couple of minutes left for market close. Let's start winding down for the day and see if there's been any meaningful recovery on the Nifty. Absolutely not. We're just around the 26,150 mark. So the best way to sum up today's trade is going to be very, very flat. For Sensex 2, about a 0.1% cut coming in. Nifty Bank has seen some recovery from the day's low, but still is going to close with cuts of about 0.2%. You have the India VIX that's exactly on the 10 mark right now. And some of the top gainers, we have to talk about Titan on the back of its strong Q3 updates. 4% uptick coming in on Titan, followed by all your IT stocks have done well. HCL Tech is up 2.2%. Wipro, Infosys, Tech Mahindra. You have other names like Persistent Systems seeing slightly more than a 4% gain on that stock. So very good move coming over there. Geo Financial has done well. Apollo Hospital, Sun Pharma. These are some of the top Nifty gainers. On the flip side, on the back of 9 observations being handed out to Cipla's German arm, Cipla is low by 4.25%. Weakness on Maruti Suzuki, a 3% cut over there, followed by Power Grid, Max Health and Tata Motors PV. The breadth of the market, yes, has tried to improve a little bit and is quite even-steven. In fact, it's actually cut in the middle right now for the advances and declines if we talk about that. But shifting focus to how the sectoral performance has been today, IT stocks through and through, a 2% uptick on Nifty IT today alone, followed by Pharma, the only two sectors in the green. But on the flip side, big cuts on auto, realty, PSU banks. This being followed by energy, banks, FMCG and metals on the absolute flat line, with some of the stocks continuing to hold on to yesterday's gains like SAIL, NMDC, Nalco. On the flip side, some profit taking on Tata Steel, Hindustan Zinc as well as Jindal Steel. But talking about some stock-specific action today, want to see what Credit Access Grameen is doing on the back of its Q4 update. You have Tata Elxsi, Elecon Engineering ahead of its earnings tomorrow is up 8%. KPIT Tech, Sonata Software. The ER&D space has done very well today. And on the flip side, it's M&M Finance, Ola Electric, Sumitomo Chemicals, Maruti Suzuki, Canfin and Zen Technologies that are your top Nifty 500 losers. But yes, that is how we've shut shop, 26,143. And Kunal, your take on where the market has shut today? Absolutely flat. It's been like a whole non-consequent day of trade coming in because we closed exactly where we started. Nothing much happened today.
Yeah, nothing much happened on the index when you look at it on a flat basis. But then I would believe that these are days where you have to wait for the markets to go into that extreme on the other side on an oversold territory, and then wait for that risk reward to be a lot more better. You know, at 26,300, we were looking at 26,500 as a resistance on the upside. But then what is the margin of safety? You're looking at a 300 points on the downside and 150 to 200 points on the upside for the index. So at current levels of 26,000, we're looking at maybe a 50 point or 100 point support for the index, and then a potential 400 to 500 points on the higher side if we manage to come back and retest the previous highs for the indices. So these are opportunities which I think a short-term trader should generally not let go of. So I think in that sense, I would probably believe that the dip which has happened today, the recovery in the second half still indicates that the 26,000 mark is a strong support. And even if we manage to open with a bit of a softer opening tomorrow morning and trade back again sub the 26,000 levels, that could be a zone where traders could look at a contra buy.
You know, one piece stood out over the last couple of days while we've been in consolidation. Kunal, exactly 2 days back, you said that it's a good time to buy IT, and it stood out today. 2% higher, the Nifty IT index, most stocks in the green, the mid-cap, small-cap really standing out. Justifiable in terms of the rally, and how much, if so? Are the larger caps going to also participate?
Yeah, so that's the best part, Harsh. You know, the large caps did not participate, even though the mid caps were all in favor. And you know, you have to try and map this up with the correction which had happened for the Nifty IT index. There was a 1500 odd point correction on the IT index from 39,000 thereabouts to 37,500-ish kind of a zone. And that was purely led by mid cap stocks which were going through a sharp correction. And the large caps were staying afloat. They were staying at higher levels. Now with this comeback of mid-cap names, this could actually act as a a strong positive effect for the large caps to also try and come out of their individual phases of consolidation. So I would believe that the trend for the IT index is positive, and I would maintain this point that you have to use that 5% odd correction which comes by in a trend as a good opportunity to try and maybe go for a contra buy or add on to positions.
All right, with that, completely out of time today on Closing Trades. Kunal, thank you so much for joining us. We'll let you go. And from Snehi, myself, and everyone who puts this show together, thanks so much for watching, viewers. Stay tuned. More action on the other side of this break.